Hello everyone, and welcome to this presentation of trading with support and resistance levels. Now, trading with support and resistance is very common. A lot of traders use this as a particular application, and I'm going to share with you my beliefs on how to trade this and what I feel is the correct way in which to trade support and resistance. Welcome once again. My name is Steven Primo, President and Founder of Specialist Trading. I'm sure a lot of you are familiar with our website, but if some of you are not, we are first and foremost an educational company. As you'll see in today's presentation, we are all about educating you, putting the power back in your hands so that you can ultimately make your own trading decisions. I've been trading for nearly 40 years, and over that time period, I have found out that the reason why most traders fail, upwards of 80%, is because you're relying on someone or something else to tell you what or how to trade. I mean, think of it. Look at your own trading. Do you go to a daily website to find out what the signals are? Do you go to some particular TV show to find out what they think about the markets? Do you go to a chat room or a trade room to have the people tell you what you think you should be buying or selling that day? This is what most of us have been trained to do. And if it actually works, then why do the majority of all traders fail? So what we try to do as specialist trading is take you out of that realm, out of that environment, and really put the power back in your hands by implementing and giving you all the information, the tips and techniques that have stood the test of time, things I've accumulated in my nearly 40 years of trading. I started trading on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years. 9 of those years, I was a market maker or specialist. I traded through the crash of 1987, made markets in roughly about 50 stocks in the crash of 87, and traded through the bull market that followed after that. I left the floor in the mid to late 90s to manage money and to pursue my own trading. And just about 8 or 9 years ago, I teamed up with ProTrader Strategies. They handle all my marketing and promoting, and we formalized specialist trading. So all we do is educate all of our students and members so that you can ultimately make your own trading decisions. And remember, once again, in my opinion, that is the only way one will become consistent in the markets. So, as you'll see in today's presentation, I'm going to give you a lot of information and a lot of education so you can take control of your support and resistance trading. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you some performance results. Trading the correct way, I feel, in my opinion, is the way to trade support and resistance. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So, we are required to show you our disclaimer. As you are taking a brief moment to view that, I would also like to take this time to invite each and every one of you to follow us on Twitter. You may want to write down our handle right there. That's at SPCLSTTRADG, obviously abbreviation for Specialist Trading. Each and every day I post new brief information, anywhere from signals that our strategies have generated to actual bits of tidbits of wisdom and daily financial wisdom. Now, the way Twitter is set up, it is rather limited. So if you'd like to get more information about what we do and what we teach, ProTrader Strategies has put together a Facebook page. You can go there on Facebook under ProTrader Strategies, and there's a lot more detailed information, some videos there. You can find out more about myself and about ProTrader Strategies as well as specialist trading. Okay, lots of ways to find out what we do. Now, as I stated, this is going to be a class since we are an educational company. So first thing I'd like to mention is that if you happen to have any questions today, please wait till the very end. This educational portion will conclude in just about 30 minutes, and then I'll take the rest of the presentation to answer any questions you may have. So kindly wait till the end to ask any questions. The only question I will answer right now is the most popular, and that is this being recorded? Yes, it is. So if you're having technical difficulties or came in late or have to leave early, ProTrader Strategies will furnish you with a link to this recording, this entire recording. All right, so let's begin. Now, as we stated, we are an educational company. Even though Specialist Trading and ProTrader Strategies provide you with signals on strategies and what these strategies are generating, we are more about teaching you how to spot them on your own. In other words, we provide our members with signals that have occurred on certain strategies, but only as information so that they can check their work to see if they have spotted it prior to us issuing them the release of the actual signal. So that's the whole point of this, a way in which to check your work, not a way in which you say, well, what's the signal today? What do I trade? So as you can see here, my goal is not to force feed you signals. My goal is not to tell you what market to trade, what the perfect time frame is, what the perfect market is. We don't believe in that. My goal is to teach you so that you can ultimately make your own decisions. This is the way I was taught. I struggled my first couple of years of trading, and I'll show you exactly how I struggled in just a few moments. But my mentors, once again, taught me the same things that I'm trying to implement in all of my students. And so my mentors taught me to basically make my own decisions by the information they had provided me. This is what I do. I teach my same students how to trade with the specialist edge, the same edge that was able to turn my trading around. All right, so here's what my mentors taught me. They said, Steve, it is the easiest thing in the world to complicate your trading. Anyone can do that. But at the same time, it is the most difficult thing in the world to simplify your trading. Now think of that. Look at your own trading plan, or look at the way you trade. Do you have tons of rules, all right? Do you have to have every indicator line up? Or are you looking at every news event that comes out? Are you trying to decipher what's going on economically, or what's going on in the world with different countries, with different companies? Are you listening to tons of people in chat rooms or trading rooms, okay? Is your trading plan just so convoluted that it's just hard to decipher? This is the way most traders, especially beginning traders, trade, because we've been taught that the way to being successful is to add on more to your plate. And that is what actually makes it more valid and more successful. But in my experience, and what my mentors taught me, thankfully, is that it's the opposite. Is that when you start to streamline and start to get rid of all this, what they call useless noise, that's when you start to become more successful in terms of consistency. So it's very, very easy to complicate your trading. You can continue to add on indicator after indicator. You can have 20 screens in front of you. You can be looking at every news event. It doesn't take a lot of, a challenging trading to do that. Anyone can do that, whether you've been trading 30 years or 30 minutes. But it takes a lot of integrity, a real big challenge to say, you know what, I'm not going to use this anymore. I'm not going to use this. I'm just going to strip down to bare bones stuff that works, that has stood the test of time. Unfortunately, we've all mostly been taught that the opposite way is more valid, which really isn't true in my experience. So here's what you're going to learn today, which is going to be extremely simple, and you'll see how simple it is that you almost won't even believe it. But I'll show you tons of examples so that you can see how simple trading can actually be once you learn how to use the tools correctly. We're going to talk about conventional trading of support and resistance, how most people trade, myself included when I first started trading support and resistance levels. Then I'm going to share with you, after a while, what my mentors taught me and what I finally realized was the true definition of support and resistance. Then I'll share with you what I feel is the correct way to trade support and resistance and how you can increase your odds for profitability and consistency by trading this way. And then lastly, I'll show you how to increase your odds even more by adding one simple tool to your trading. So, going to learn a lot today, going to give you a lot of free information that you can start using as early as today, as soon as we conclude today's presentation. All right, let's start out with conventional trading of support and resistance. And once again, for those people who may have come in a little bit late, remember, we will only be taking questions at the very end. If you happen to come out late, we will take questions at the end. Contact Pro Trader Strategies if you need a link to this recording, if you have to leave early or so. All right. Here is the standard definition of support and resistance. Support and resistance is a concept in technical analysis that states the movement of the price of a security will tend to stop and reverse. Very important, that term there, stop and reverse at certain predetermined price levels. Okay, so that's your standard definition. So if we look at an older chart, and by the way, I'm going to start by sharing some older charts here with you just for educational purposes, but towards the end of the presentation I'll show you charts that are as recent as this past week, okay? So let's look at this older chart here of Apple. Now someone looking at this would say, well, Steve, here's where the support is. Obviously we've come down to that level roughly around 2 or 3 times. This is where all the volume confirms it. This must be where all the institutions want to buy, and so this is where I want to buy too, right? And so remember, the standard definition tells us that price will come to a certain level, stop, and reverse. And as you can see, it worked like a charm. Apple went straight up based off of this support level. Now the same thing will work in other markets, different time frames. And here's a daily chart of the Emini futures going back about 3 or 4 months ago. As you can see here, we were starting to go up, but then met some resistance right here. We couldn't get through that level. All right, so standard support and resistance definition will tell us that price will mostly, stop and reverse levels and start to go in the opposite direction. So there, it works like a charm, okay? So this is the way I was taught. There were other confirming things to apply, such as volume, such as checking out what the institutions were doing, things of that nature. And when I started studying this some nearly 40 years ago, it would work like a charm until I started using it, because this is what most likely would happen. Everything would line up, as we see in this older example of TGT. We'd hit the support here, just like an apple, and I'd jump in and buy, thinking that, well, it's being confirmed by all the other tools, the indicators, the volume, all the other big house institutions, and then this would happen. Okay, does this look familiar to anybody? Conversely, something like this in the currency pairs. Okay, here's a chart of the euro dollar. You see there's pretty much basic support right there. Seems like it should be holding. We've come down. We've never been this low before. All the indicators are tremendously oversold, and it looks like we're stopping right here. So you jump in and buy the euro dollar, and in fact, it even goes lower. And we don't have to stop there. We can go into intraday trading as well. Here's a hourly chart of IBM. Looking at this chart, we see, well, it's gone up to a certain level, but it can't get through that resistance, all right? So this must be where the sellers are. So I want to sell too, right? So you sell, and guess what? It goes right through it. So you think, well, maybe I jumped in a little bit too quickly. Actually, this is probably the correct support resistance. So you sell again, and you continue to sell because every resistance is finally met by going through. So we have to ask ourselves, is there any consistency in this way of trading? And it's been my experience that there isn't. Okay, there really is no consistency in trading the conventional way in which people trade support and resistance. Sure, everyone has a different idea of, well, you have to add volume, you have to look at what the institutions are doing, or the special program I've devised, which calculates exactly where support and resistance is. Trust me, I've tried them all in nearly 40 years, and nothing works in terms of consistency. Ask yourself, is it working that well for you if you've ever traded with support and resistance? Now, I know there are certain traders, in fact, I know of some who do very well trading support and resistance levels, but they are the minority. Trust me, they're maybe the 1 or 2% of all traders. The rest of the traders involved, the 97, 98%, myself included, are not able to consistently trade support and resistance using the standard conventional wisdom. So, after studying this, and after what my mentors taught me, and after really realizing, after being on the floor for 16 years, I finally, had a light go off, and I decided, boy, this is actually the true meaning of support and resistance. It's nothing all that complicated, and I'm not saying this once again to be condescending or arrogant, but actually trading is very simple. And if you take it down to the smallest common denominator, you'll really see the reality in what is going on. So once I finally, came to the conclusion that it wasn't working for me, I came up with the true definition and application of support and resistance. And simply it is, support equals there are more buyers than sellers. Once again, I'm not trying to be condescending, but at a certain point of time, at a certain level, there were more buyers either in a stock, currency pair, futures, contract. There were more buyers at a certain level than there were at other times. This created some type of false sense of security, thinking that it was going to stay there. Here's the only problem. This in no way guarantees that those buyers will continue to be there. In other words, I used to be on the floor. I made markets in roughly 50 stocks. At any given time, I used to have brokers come up to me and say, Goldman Sachs wants to place a large order, roughly $500,000 at a certain limit in waste management. This is a stock I used to trade. I say, fine, I'll put it in the book here. All right. That generated support. Okay. Now, did I know how long that order was going to be in my book? Absolutely not. That order could have been in there maybe a week. It could have been there maybe 10 minutes. But at any given time, they could have pulled the order or canceled it. And then where did that support go? It was gone. It's diminished. There was nothing left to hold up the price. Okay. So all it meant that at one time there are more buyers at a certain level than there were sellers. So it was keeping the price at a certain level. Was it guaranteed to stay there? Absolutely not, because they could cancel the order at any time. Now conversely, all resistance means is that at some certain point in time there are more sellers than buyers. I would get sell orders as well. I used to trade US Air. I would get 1 million shares to sell at a certain price at 30. All right. Once traders would come up and be buyers, and they'd see that tremendous resistance, I wasn't allowed to tell them how many I had in there. I'd just say a large order, and they saw that it wasn't going anywhere. That created some type of false sense of resistance, all right? And price could not get through that level. Was I guaranteed to have that order there for ages? Absolutely not. Many times they would place an order in there, and in less than a couple of minutes, they'd cancel it. You know, so there's no reason to think that something that is either holding up price or keeping price from going higher is going to stay there. It doesn't mean anything. So should we bank on this? So if we think and we see in our charts that price is holding, should we bank on thinking, well, if it's holding, I should buy there? Absolutely not. Should we bank on selling something because it can't get through a certain level? Absolutely not. The institutions don't mean anything, in my opinion, because they can change their ideas, change their mind at any time. So why would I care what the institutions are doing? Because they're changing their mind all the time. They may go into an entirely different stock. They may pull their order and say, we're not going to be sellers here anymore. We're going to go over into this sector or this arena. So don't concern yourself with outside sources. Don't overcomplicate your trading by using conventional wisdom. There is no consistency in that way of trading. So if this is what really support and resistance is, and if there is really no consistency in trading this way, how do we trade with support and resistance? We're going to sell support and we're going to buy resistance because we know there is no guarantee that those orders will stay there. We know there's no guarantee that buyers will be there, and we know that there's no guarantee that sellers will continue to be there. So let me show you how we can apply this to our trading. This is what support is. This is what we should be looking for. Now, I know a lot of you have been taught, remember how I said in the beginning, to keep things as simple as possible. The reason why most traders fail is because we overcomplicate. And it's the easiest thing in the world to overcomplicate. You have to have 20, 30, 40 bars or a month's back of data in order to figure out what the support is. No, there's no way. You do not. There's absolutely no way you have to even consider those things to figure out what support is. All right. All you need to look at is this 3-bar pattern. Bar number 1 makes a low, bar number 2 makes a lower low, and bar number 3 makes a higher low. This is the definition of support. All that is telling you is that price is going to hold there. Are we guaranteed to have it hold there for a while? No, we have no idea. So what happens is once we trade below that, we are selling. We're not going to use that to buy to think that we're holding there. We're going to use that to sell. Conversely, resistance is also a 3-bar pattern. You have bar making a high, the second bar makes a higher high, and the third bar makes a lower high. You create this kind of a arrowhead approach, and here is your top. Are we going to sell there? Absolutely not, because we know that there's no consistency in that type of resistance holding. So once we trade through there, we're going to simply buy. You see how simple this is? We're actually doing the opposite of what we've been taught. Remember, once again, there is no consistency to trading support and resistance in its standard way. So we're simply going to do the opposite because that's really where the key lies. Now, I know a lot of you would say, well, Steve, boy, this is really hard to digest because I've always taught that if we look at this 60-minute chart of IBM, this is the way you define resistance, okay? Resistance looks like this. I mean, you need at least 20 or 30 bars to tell me that we can't push through, okay? I can't just look at 3 bars and have me realize that. Well, yes, you can, because this is the complicated way to look at this area. Now, if we go up to one higher time frame of the same chart, we'll go up to the daily bars. This is the same time frame. In other words, the same time period. And when we condense it, all we've done is condense it by going to a higher trading level. This is the same time period. So yes, you can. Same thing with this euro dollar. Someone would look at this and say, Steve, I've always been taught I need to look at support this way. There needs to be a number of bars trying to hit a level and they can't go through it. Well, let's go up to a higher time frame, all right? This is the daily bars. Let's go up to the weekly, the same time period, all right? Do you see how we just simplified it? We simplified it by condensing the time period. So yes, every time you see that 3-bar pattern, just feel confident in knowing that on some smaller time period, you have that very complicated way of viewing it, where it's making a number of bars and we can't get through a certain level. Just simplify it by going to a higher time frame. All right, let's look at some examples and we'll show you how this technique works. Here's SYY, okay, coming into the month of April, just coming into the last couple of weeks here, all right? Now, as we see here, the stock is going up, and here's the 3-bar pattern, 1, 2, 3, 1, 2, 3. All we have to do is identify those short-term tops. You see that? And then rather than looking at them as some type of resistance, I'm sure all the way up, people were saying, well, there's resistance right here, Steve. We can't get through. Well, what happened? We went through. Well, there's resistance right here. We have 3 bars coming through. Well, what happened? We went through. Same thing all the way. What happens to the resistance? All you have to do is simply find out where those short-term tops are, and the minute we trade above, that's where you buy. Now we can do that going short as well. Here's Tesla coming into the end of February. All right. Now we're looking to go short. Here's a short-term top right here, but we never went above it. So let's look at the short-term bottoms, okay? All these little pivot point bottoms. That's so-called support. Don't you think people were thinking there was support right here when we came down and we're stopping? Well, what happened to that support? We went lower. And then there was support right here. People thinking, well, look at this. We bottomed and we had a nice up day. What happened the next day? Right back down. Silly to think of support and resistance as buyers going to stay there. All that meant was that there were buyers there for a certain point of time, and then they probably left. And then there were more sellers than buyers. All right? So the minute you find these short-term lows, that's your point to sell once you trade below them. Now remember, we're just sharing with you the concept of how to trade. I know a lot of you would say, well, Steve, okay, where exactly do I buy? 1 tick below, 10 ticks below? Where do I put my stop? Where do I exit? We're just showing you the concept, the real concept of trading support and resistance right now. We're not going into a full-fledged trading method or trading plan. I just want to share with you this concept to open your eyes on what the true way is in which you should be viewing support and resistance. Now, at the same time, I don't want to, have this bed of roses here for you and make you think that, wow, everything works perfectly. Well, I'm just going to trade this from now on, because from time to time you will see this happen as we look at this older chart of Oracle. Using the exact same technique, we see here that we have some short-term tops, and the minute they're broken, that's where you step in and buy, okay? And once you go long, you're hoping for price to continue upwards, but then it breaks some short-term lows. So you say, okay, well, I guess it was just a small little consolidation, so we're probably going lower. So I'll sell, I'll exit my longs, and now I'm short. And so you now expect for the market to go lower, and guess what? It goes right back up. So now you have a major loss here, 2 major losses. Now you cover your shorts, and now you go long. You remain long, and you buy some more thinking, well, it's probably just a little choppy. We're probably going to go much higher, so I'm still long, and then you place your stop here. Hopefully you don't get to that low, and that's where you'll stop and reverse, and then guess what? This happens, okay? As you can see here, in this choppy market, this technique doesn't work well at all. In fact, 99.9% of all techniques don't work in a choppy market. So how do we trade new and advanced ways of trading support and resistance in choppy markets like this? Well, the answer is how to increase our odds in every market is by simply adding a tool that you've heard me probably speak about a million times before that I use on a daily basis. We're only going to buy resistance in an uptrend, and we're only going to sell support in a downtrend. And the way we do this is by adding the PET D. The PET D is the best tool I know. I was introduced to over 30 years ago on the floor of the exchange, and it's a great trend identifier. It's not a strategy, it's not a system. It simply is probably the best thing I know of that can identify what the short-term trend is. And what we've done is we've turned it into a color bar algorithm. Some 30, 40 years ago, I had to calculate this by hand on the floor of the exchange, and we were only able to use it on daily bars because it was too difficult to calculate every 5 minutes, every time a bar closed. But now we've been able to do that. We programmed it into a color bar. And so a series of green means you're in an uptrend. Conversely, a series of red bars means you're in a downtrend. And that's all you have to do. You just have to look for the series of color bars, which will tell you what the short-term trend is. Therefore, it will keep you out many times, not guaranteed because nothing is guaranteed, but many times it keeps you out of this chop, which we all know as traders is so difficult to trade through. All right, so here's how we're going to use it now. Remember that buy pattern where we had the short-term top that supposedly was resistance? Well, we're going to look for price to trade above an all green pivot high. And we're going to buy when price trades 1 tick or 1 pip above that so-called resistance. So in other words, this is what we were looking at before, But now that we've added the pet D, we have to see this. All three of the bars must be colored green. Bar 1, bar 2, and bar 3. Once we trade above, that's our signal to buy. Conversely, if we're going to be going short, we're going to look for price to trade below an all red pivot low. So when price trades one tick or pip below this so-called support, that's when we're going to be selling. So this is what we were looking at before, that 3-bar pattern. We make a low, followed by a lower low, followed by a higher low. We're still going to look for that pattern, but all three of these bars need to be colored red. When you see that and we trade below, that's your signal to go short. Now we've made it simple. Why? Because we are in sync with the trend. You see, the reason why it was so difficult to trade in that Oracle example is because there was no trend. We were going back and forth, and the pet D, not guaranteed once again, but most of the time will keep you out of markets like that. So let's look at some stock examples, okay? IRM. This is IRM coming into a couple of weeks ago in April. Once again, as we see here, that obviously someone would say, well, Steve, it's not hard to see we're in an uptrend. Why do I need to have this pet D? Well, sure, we're in an uptrend here at $32, $33, $34, but let's look back to here in January when the stock was trading at 26, okay, about 7 or 8 points lower. All the bars were still green. How did the pet D know we were going to continue to be in an uptrend? That's how good of a tool it is. So once you have all the bars green, you look for these little short-term highs, okay? And here's where they are. And once you trade above them, that's your buy setup, okay? Now we always tell our members that the first buy setup has the best bang for your buck. So you could have purchased about 27, 28, and roughly got about 6 points out of this had you taken the first 1 or 2 setups down here. How about TXT, all right? Once again, someone said, well, Steve, yeah, it's easy to see we're in a downtrend. Well, that's true, but looking back here, this was in December of last year, the bars were green, so you had a little short-term high right here. You were going to buy if you traded above. But the very first week of the year, TXT turned red. And what do we have? We have 1, 2, 3. Here's our so-called support. Now, most traders, not knowing this or not knowing how to apply the pet D, would say, well, this is probably support. We should probably be buying here. We made a little pivot low. This is where the buyers came in, and we've had higher closes. We don't care about that stuff. Remember, that's overthinking. It's overcomplicating your trading. There is absolutely no consistency in looking for tops and bottoms as related to support and resistance. We're going to fade those. We're going to exploit them by listening to the pet D. The pet D is telling us we created a little short-term bottom right here, a little false sense of security, false sense of support, and all the bars are red, telling us that we are in a downtrend. So why would I think that that's going to hold at that price? If we're in a downtrend, why is price going to hold? And as we see here, we have these little so-called support areas all the way going down from roughly 41 all the way down to 31. How about MLM? Okay, this is coming into this last couple of weeks in April here. Now, obviously, the first couple of bars were red, but coming back into February, we had a nice move up, and the bars continued to be green. So even looking back in hindsight, once again, people could say, well, yeah, Steve, this thing has gone up for the last 2-3 months. Sure. But how about 2 months ago? Did we know we were going to be in a nice sustained uptrend? Absolutely not. The pet D did. So all we do is listen to the pet D. You don't have to listen to earnings. We don't have to listen to somebody in a chat room or a trading room telling us what to buy or sell or what time frame. We don't have to listen to institutions or you know, what the hedge funds are doing or what you know, what the institutional traders have their eyes on. Who cares? Trust me, I was on the floor. I had access to all that information, and I still couldn't make a dime trading support and resistance the conventional way. It wasn't until I had these tools in front of me and I simplified my trading. Remember, I got rid of all that useless noise, and I just followed a couple of things that my trading started to become consistent. So this is what we're trying to instill in all our members. So you just simply identify the short-term tops and buy once you trade above. If you're taking the very first one here, about 140, well, that's about 25 points in your direction in the next month or two. Okay. I realize this is an expensive stock. You could purchase options if you want. You didn't have to purchase MLM here at 140. You could have easily bought a directional call or some type of long strategy using options. How about FSLR, First Solar? Once again, looking back here in March, all the bars were green, and you had a short-term top here telling you that this is not resistance if we are going to trade through it. Well, we never did trade through it, so guess what? Turned out to be some resistance. But we did not know for sure until all the bars started turning red. That was telling us that we were definitely in a downtrend. If we're in a downtrend, we're looking for the short-term lows, as you see all along the way here, to be exploited. And that's where we want to sell, okay? We could have sold that one at roughly around 67, and the stock went down to 60 in the next couple of weeks in April, just a couple of weeks ago. Obviously, some news came out here where the stock gapped down. Did we know about any of this news in advance? Did we know about it when we created this area to go short here? Absolutely not. We don't follow news. I stopped looking at news over 30 years ago, and I was on the floor, and I was in charge of roughly 50 stocks. And I stopped looking at news. I stopped trying to, figure out what their earnings were going to be. I knew what the company did, but that was about it. And I still did very, very well. I basically retired after trading because it was, there was no reason to look at that. Now, obviously, if you're trading long-term in your IRA account, you need to know about a company or about what's going on economically. But if you're trading for a couple of weeks or even a couple of months, there's absolutely no reason I would ever suggest anyone to concern themselves with news. Absolutely nothing, okay? And someone could say, well, yeah, but what happens when an announcement comes in? I'm not guaranteeing you that we're always on the right side, but let me show you this example right here. This is what happens usually most of the time because why? We are in sync with the trend, and most times announcements will be in sync with the trend. PPG, here's another great example. Looking back in hindsight, someone say, well, Steve, why would I need the PET D? It's easy to see we're going up. Well, sure, it's easy to see right here. But did you know back here in February that you were going to be in an uptrend? Well, we did. The PET D changed colors from red to green. So once we do, you just look for those short-term tops, and you could have gone long at 98 and roughly 15 or 16 points in the next month coming into this past week. Now, here's a great example of what people are always saying about news events and how about, Steve, this is a little bit too risky. I need to look at news. Well, listen, I'm not going to tell you how to trade because that would go entirely against our philosophy. Remember, we want you to make your decisions. But if someone asks me, Steve, what news event should I look for? What should I know about the company I'm trading? I would suggest don't look at anything, and you should know absolutely nothing about it. That will only get in your way if you're trading. If you're investing, yes, be my guest. Go do all the research, look at everything about the company or whatever you're investing in. But if you're trading and holding on to things for weeks or months, it makes no difference. Once again, I've been trading 40 years. I haven't looked at a news event in probably 38 years. Okay? So here's a perfect example of that. HRB at the end of February, coming into March, we had no idea what the stock was doing. Someone could have said, well, Steve, it looks like we're trying to hold here. We've come down, made a bottom, gone up a little bit, and come down, seemed to support a little bit. And after all, we have a bullish engulfing pattern right here. And it looks like we're kind of holding here at 32.5. I think this might be a good area if we have a short-term downtrend line here. Once we break that, I'm going to buy because this looks like a good hold here. And plus, I've been reading some good stuff about the company. A couple of institutions have been touting it, some firms. So I'm a buyer of this stock. Do we listen to any of that stuff? Absolutely not. Why overcomplicate your trading trying to look at stuff where there is absolutely no consistency? The only thing I know that has consistency is the PET D. And the PET D I've been using almost every day for over 35, 38 years, okay? The PET D colored all the bars red. And right here, what do we have? We have a short-term bottom. So that's our sell point. So myself and our students who were following this could have shorted at 32.5, and look what happened. 3 days later, some news came out. Stock gapped down from roughly 32.5 down to 28, and then has continued to go even lower and lower coming into this week. Now, did we know anything about this news event? And there was an HRB that caused it to open points lower? Absolutely not. Did anyone from the company call me up and tell me, Steve, you might want to issue a sell signal in HRB and tell your students to go short? Absolutely not. So someone would say, well, where did you get your cue from? Where did you get your signal from? From the chart in front of me. Remember, we don't listen to people in chat rooms or trade rooms. You don't listen to people on TV. You don't listen to news. Everything you need to know is right in front of you. You can apply this also to ETFs. Here's an older chart of IWM. That's the ETF for the Russell 2000. A lot of people say, well, what happens when the trend reverses? Well, when the trend changes and reverses, you reverse with it. As you can see here, IWM with the PET D attached went up, then went back down, then went back up again. Okay, well, you just simply add this technique whichever way the PET D is going. You can also apply this to commodities, crude oil. Okay, here's a monthly chart of crude oil. Everyone in the world has been, saying, boy, crude oil just keeps going lower and lower. Well, you know what? In September of 2014, all right, September, October, the bars were already being colored red by the PET D. We didn't worry which way it was going. We already knew that the short-term trend was down until we had a confluence of green bars. We're short crude oil. There's nothing to look at any news, nothing to look at what's going on worldly. It's all displayed here by the PET D. So we can apply this if we want to monthly crude oil. It could have been short at the very beginning of 2015, okay, over a year ago. Or a lot of people say, well, Steve, I can't trade crude oil monthly. Okay, a lot of our traders like to go down to a smaller time frame. Here's a daily bar of crude oil in the same time frame coming into 2016, okay? Use the same concepts. Let's look at a different market to show you that it just doesn't work for stocks or commodities or ETFs. It can also work for the futures markets. Here's an older chart of the Emini, a 30-minute time frame. Obviously, in hindsight, it's been going higher in an uptrend, but the PET D knew that days before, well before it started to take off. Why? Because it was green all the way back here before it gapped up. And if you use this simple technique and taking the very first signal, we're talking about nearly 30, almost 40 points in the next 5 days on a 30-minute chart, okay? Or we can go to a smaller time frame. Here's a 2500 tick bar, all right? Just as I said earlier, once the trend changes, you simply switch and reverse. Remember, we always trade in sync with the trend. We're never trying to pick tops and bottoms. We're never looking at support and saying, well, price should hold here along with these other institutions. I'll buy here because that's where they're buying too. Or I'll sell here because that's where they're selling. No, we just go whichever way the trend is because we just want to follow the market. We don't care what outside sources are doing because they're usually wrong. But the market's never wrong. The market just does what it does. Our job is to simply jump on board. So once it was going lower, as we see here on the left side of the chart, well, you go short. And then once we reversed, then you simply decide to go long. Now I want to show you what happened just a few days ago on Monday. I'll give you two examples of how you could have traded this with futures, because I know a lot of you may be saying, well, Steve, I don't trade stocks, and a couple of these examples are from last month. How do I know this really works? Well, let me show you something that happened 2 days ago. Okay, and it's happening right now, but this is just a good example for educational purposes. Here's a 15-minute chart of the E-mini, and as we see in the lower left-hand corner, this is on the 18th, okay, April 18th, which was Monday. Now the market gapped lower, so the very first bar was red, but then things changed, and the very next bar was green, and then we started to have consecutive green bars. So it looks like we're going higher. A lot of people would say, well, you know what, we've hit some type of support here. It looks like we're making a top. I think we're going to roll over. Don't, let that get in your way. All you have to do is look at the color of the bars. If the bars are green, you look for the short-term tops. And had you purchased right here, where everyone else thought this was a top once you broke above it, well, had you held to the opening of the next day, that's about 12 points in your favor, or about $600 per contract. It's not bad, holding a position 1 day, 24 hours. If you had 10 contracts, that's $6,000. That's not bad. But let me show you something that would have been even easier on the same day. Let's go to an even smaller time frame. Let's go to a 2500 tick bar. Same exact day. We're looking now at the 18th, which was Monday, just a few days ago. We gapped lower, and these bars are red. So this is where you would have placed your initial orders to go short once we traded below. But we never traded below. And then once we started becoming green, that's your signal that we are now in an uptrend. So look at all the areas you could have bought here. And in the first hour, you didn't have to wait for the end of the day. If you're trading a tick chart, the very first hour you would have made 12 points or $600 per contract. There's lots of different ways to trade this. That's why we say we are not a statistical. We don't have numbers to show you what the percentages are. I know many of you may be asking this at the end of the day because it's not a strategy. This is just a short-term trend identifier, and we give you different environments and ways in which to trade. But it's up to you to decide. We're not going to make statistics off of each and every market, each and every time frame, each and every direction. We're not a statistical company. We're just teaching you things that have stood the test of time. Now lastly, let's look at some Forex examples before we go into question and answer period. Here's a monthly chart of the Canadian dollar starting in 2013 going all the way into this year, March of this year. All right. Now obviously someone once again would say, Steve, yeah, I don't need the PET D. I know we're going higher. I can see right here. Well, did you know it was going higher back in March of 2013? Okay, 3 years ago. We did by looking at the PET D because the PET D colored all the bars green way down here. So all we had to do was simply find out where these short-term tops were, and even on a monthly time frame, you could have purchased. And look at all the thousands of pips you could have gained by simply holding on to this. But once again, we realize not everyone trades the currency pairs on monthly bars, so let's go to a 60-minute chart of the dollar yen. And once again, this was going back to last week. This was actually Friday, Thursday and Friday. So which direction is the dollar yen going? In hindsight, obviously it's going lower on an hourly time frame, but we knew well back here that we were going lower. So all we had to do was look for these short-term bottoms, and if we wanted to carry the position overnight, we could have had a really nice trade here, even though we would have held on to the next day. Okay, so I've shown you how this works in different markets, in different time frames, in different directions. So it doesn't just, like so many other systems or strategies only can apply to one market, one time frame. It's up to you how you want to use it. Remember, we give you things that have stood the test of time and put the power back in your hands. It's up to you to decide how you're going to apply it, where you're going to enter, where you're going to place your stop. In all our courses, we teach you all our different stop levels, all our different entry points and exit points. But once again, you can decide which one you want to use. So let's recap. We shared with you the conventional way most people trade support and resistance. And I showed you through example and through my experience how, sure, there is probably 1 or 2% of all traders are successful trading that way, but the majority of us are not. Why? Because there's simply no consistency in trading support and resistance the conventional way. All right? We cannot rely on support to stay there, and we cannot rely on resistance to stay there. Why? Because all they are at some time big sell orders or big buy orders that are creating this false sense of support and resistance. Are they guaranteed to stay there? Absolutely not. They can be pulled or canceled at any moment. So if you think there's support at 50 at a stop because it has stopped there each and every time, all that means is that there are buyers there at a certain time, more buyers than sellers. Are they going to stay there? Absolutely not. So when they pull, when they leave, or when more sellers come in, we're just simply going to fade it. We're going to go the opposite direction because most of the time they do not hold, okay? That's the true definition of support and resistance. At some certain point in time, at a certain price level, there are more buyers or more sellers available at that level, but they are not guaranteed in any way that they're going to remain there. So we show you the correct way to trade is simply to fade these so-called support and resistance levels. And then lastly, we shared with you how to increase your odds for trading this technique is to trade in sync with the trend. The only trouble is most people don't know how to find out what the trend is or don't have a tool that helps them find out when the trend is about to begin. We do. It's called the PET D. And we feel the best way to trade this technique is with the PET D. So here's what we're offering all the people today. We have a great discount for you. We're offering you for all the attendees our roadmap for any market. It's the Primo Early Trend Detector or the PET D. Excuse me. It's a proprietary color bar algorithm. We will include the add-on for your charting software package so that you can change the colors from green to red. All right. In the course, we also include 2 continuation trading techniques as well as 2 pullback trading techniques. We also include a trailing stop technique, all by applying the PET D. Remember, you can use this on any market, any strategy, and any time frame. And once you become a member of the PET D course, you have lifetime correspondence with me as your personal mentor. You can contact me whenever you like, and I will get back to you as soon as possible. So this is all included. Now you saw how powerful the PET D can be in helping you with any strategy. Now remember, you don't just simply have to use it for support and resistance type of techniques. You can apply any strategy. Let's say you have a current strategy right now that isn't working too well. it's maybe, okay sometimes, and then other times it goes into a large drawdown. I really feel confident that by adding the PET D, by being in sync and knowing when you are in sync with the market, you will really increase your odds for success with any technique, with any strategy. Even though we provide you with 4 different techniques for trading, you can still apply whatever you're trading right now. And I feel so strongly that it will increase your odds. Now, this is all for trading once again. Now, I know a lot of people like to look at the market in terms of long term. Well, you can also use the PET D for long term as well. We have seen that it works tremendously for all you long-term investors, for your portfolios and IRA accounts. Let me show you what I mean here. Here is a monthly chart of the S&P index going back roughly, about 21 years now. This is going back to 1995. And as we look at this chart here, we see how the index on a monthly basis had all these nice peaks and valleys, how we went straight up and then straight down, how we hit the dot-com top and then fell out of bed and had the really dot-com crisis, the crash that followed from 2000 down to 2003, and then how we tried to go back up and we met those highs once again in 2007 and 2008, and then the banking crisis hit and we had the great crash and recession of 2008. And then starting in 2009 or 10, we've started to go back higher. And a lot of people think we're flirting with highs now and we're making a top and we're getting ready to fall out of bed again. All right. Is there any way we could know that we're hitting some type of top such as we were right here? Okay. Anyway, and so that we could at least be on the sidelines for the next 3 years of downward movement? Well, we think we have the answer. That's by simply applying the PET D. All right. So as you see here, we see a majority of bars going in one direction. Every once in a while, you will see a splash of red or a splash of green. Okay. What we call for in long-term analysis is that you need to have 3 bars of a different color in order to tell you that the trend has changed. So all the way going up here from 95 all the way to 2000, we had maybe a couple of bars, maybe 1 red bar, but we never had 3 until right here at the end of 2000. 3 consecutive red bars. That would have been your signal to get out of your long-term positions, to be on the sideline in cash, and you would have missed the majority of the dot-com crash going into 2003. Once you had 3 consecutive green bars, it's time to get back into the market. And you rode it all the way up until the end of 2007, where you had 3 consecutive red bars and you missed the banking crisis entirely. Now, in 2009, 3 more green bars appeared, consecutive green bars, so that was your signal to get back into the market, and you have been in the market ever since. Sure, we've had a couple of red bars, but we have not had 3 consecutive red bars. Now, this is a current chart up until the last month, okay? Wouldn't you like to know at the end of April if we are now in the 3rd and final red bar before we possibly have another downward move in the market long term? All right, this is what the PET D can do for you. So as you can see, the last 2 months were red. We're waiting for the end of this month to see if we will be in a full-fledged bear market, hopefully repeating what we saw before, or we're waiting to see if we will just have some type of consolidation and go higher. All this is included with the PET D. Once again, it's a roadmap for any market, any time frame, any direction. So many ways to use it, and you can also apply it to what you're currently trading, and we really feel that strongly. It will increase your odds for success even more. All right, so you see how valuable this is. We are roughly selling the PET D for $29.95, but we're dropping it down $500 for all the attendees today, down to $24.95. In addition to that, we have payment plans. So you don't have to pay the entire full price. You can have a small deposit and still come on board and be up and running as soon as possible. But this is all for a limited time. These discounts and the payment plans are for a limited time. So here's how to take advantage of these great deals. As I stated, I've teamed up with Pro Trader Strategies. They market and promote all of my courses and techniques. You can contact them at the email address seen here or call them directly to set up a payment plan. For a small deposit, you can be up and running, or you can simply click on the link down there. Now that link, as you see at the very bottom, is not live. That's not a live link, so you just have to copy and paste that onto your browser. I believe someone is going to paste a live link in the chat box shortly, so just simply copy and paste that, and you'll be able to go right up to the sign up page, okay? Now I'm going to leave all this information up for you. As you can see in your chat box, they've posted the live link. So simply click that on if you want to go to the sign up page or to get more information about the PET-D. And once again, I want to thank you all for holding off on questions. I'm going to open up the question and answer box and try to answer them as best possible. JC asks, is there any scanning capabilities with the PET-D, and can we see live charts? First of all, on the live charts, JC, I apologize. This was just a static PowerPoint presentation, so I don't have live charts with you right now. But yes, you are able to scan with the PET-D, depending on what charting software you have. The best thing to do would be to contact ProTrader Strategies, since they handle more of that than I do, and they can tell you which scanning capabilities you have, depending on what platform you have as well. But once again, it's easier to present these PowerPoint presentations than going through the live capability, okay? Let's see here. Let me go to the next question. Let's see. Hans says, big adverse movements are possible temporarily. How to place stop losses? Well, once again, Hans, we teach you all about stop losses in the course, all right? And plus, we have a different type of stop loss. I believe there are a couple of stop loss techniques using the PET-D. So this is a great thing. One of the best things about the PET-D is that you can have a strategy which has a set exit price. And so what we say is, okay, listen, if you like that strategy, that's fine. But what we say is, maybe sell half your price at that exit, move your stop to unchanged, and then just let the PET-D tell you when to get out. Once the PET-D starts to change color, that's your signal to get out. So many of our students apply this technique, and rather than maybe taking 2 or 3 points off their initial exit point, they can get an extra 5, 10, 20 points by waiting for the PET-D to turn a different color. Remember, this is not guaranteed because we don't know what's going on with the stock or future, whatever you're trading, but many students use this and have had some really nice success, okay? Let's see here. Let's see, that's Joe says, I use TradeStation. Have you a scanner or TradeStation, or can it be used with the radar screen? Will help you. Yes, they have the scanner for, I know they have it for TradeStation because I use TradeStation myself. And yes, they have this capability. Once again, contact ProTrader Strategies. They can, because they're familiar with almost all the platforms and everything it can be applicable with. And I can tell you just right off the bat, the PET-D works on MT4. It works on TradeStation, Metastock, NinjaTrader, Sierra Charts, Interactive Brokers, FCXM, and Thinkorswim users can also use it, but they also have to make a few changes because of the way it's set up. What you do is you just simply run the data from Thinkorswim onto a free NinjaTrader platform, which we set up for you. And then everything is on your NinjaTrader platform. So you can be looking at 2 platforms at the same time if you'd like. So that's how we set up, and we set it all up for you, but they're more expertise at telling you the nuances of each and every one of those platforms. So contact them if you have questions about scanning on each and every individual one, okay? Carrie says, but using this method requires real large stop losses levels. Well, not really, Carrie. This is, once again, there are, it's up to you where you want to place your stop. Once again, it's your choice, but not really. There are a lot of different stop placements that we teach, and most of our courses have anywhere from 4 to 6 different types of stop level placements. Some are very, very conservative. Others are great. So it's up to you. Remember, we were just teaching you a technique today. We didn't go into stop loss. We didn't go into exit points. We didn't go into money management. That's all included in the course. We just can't give you everything away for free, okay? This is a great technique, but experiment with it. See how you like it, okay? Gene says, when someone says fade it, does it mean you do the opposite of what seems to be happening? Yes, that's the usual. I'm sorry if people didn't understand that. That's a term from the floor. That usually means, yes, you do the opposite. So if most people are buying thinking that a stock's going up, you're selling into it because you're fading it, or you're believing the opposite, okay? Good question. Valerie asks, is NinjaTrader available? Yes, it is. It works great with NinjaTrader. In fact, I would say a large group of our traders use the NinjaTrader. And once again, if you do have Thinkorswim, it's extremely simple to set up on NinjaTrader. We're just splicing the data, so you can still watch Thinkorswim. You just splice the data onto a different platform as well, so you can have both platforms running. And the beauty is, everything we have runs on NinjaTrader. Okay, Thinkorswim doesn't give us that capability. They kind of reserve it for themselves. But NinjaTrader allows us to have the pet D, all of our strategies on there, so you can just toggle off one and look at the other. And we put this together for you free of charge. Usually takes just a matter of moments. We have a great tech support department, and they can do it for you. Just set up an appointment, and it's all done. Okay. Nick says, won't you still get a lot of false signals in a sideways trend with the PAT D because markets move sideways about 70% of the time? Yes, but here, Nick, how you doing? The beauty of the PAT D is that many times you won't get these signals because, remember, you need all three of those bars to be colored a certain color. Sometimes in a very whipsaw market, you'll get two of them colored red and then one green, or maybe two colored green and then one red. So it will keep you out of those scenarios a lot. As I stated in the presentation, there is nothing guaranteed to keep you out of whipsaw markets 100% of the time. And I'm not, confessing to that at all. I still deal with whipsaw markets and sideways markets myself. But that's just the price of doing business. That's always going to happen. I've been trading for 40 years, and in 40 years, I've always had to deal with, sideways markets. You will never get rid of it. But these tools that we have and teach really help you stay on the sidelines or teach you how to trade around those, okay? Let's see. Next question. Does it deal with pullback and continuation? Yes, as I stated, we have in the course, we have 2 pullback techniques and 2 consolidation techniques. So they're really extremely powerful, okay? Lana asks, that is for stock data only, not indices? Well, I don't know what you're asking, Lana, but you can use it for anything, I believe. I'm not sure if you're asking a data question or a trading question. If it's a data question, once again, contact Pro Trader Strategies. But if it's a trading question, I showed you how you can apply it to indices. I showed a couple of IWM references there, and it will work just fine. You can use it as a market identifying tool. So if price trades above so-called support, maybe not necessarily you're going to buy the index, but you'll use that as a buy signal that the market is going high, okay? Valerie is asking, do we have a demo version? No, we don't, Valerie, because we don't believe in that. Our concept is just to provide you with this information and have you as my mentor right away. If we just give people demo versions, they're not going to know how to use it correctly. Most people will use it incorrectly, and then they'll decide that this is not worth anything and they'll throw it away. That's not, right off the bat, we want to tell you that we are an educational company. And through my education and through my experience, I want to share with you what I feel are the best ways to implement this particular tool. So just to give it to people and say, good luck with it, try it for a couple of weeks or so, I'm most likely you wouldn't have any luck with it, or you wouldn't know how to properly implement it. They can only come through our courses and through my helping you, okay? You're asking about the free data. I believe the free data from NinjaTrader, if that's what you're asking about, Lana, that's something you have to ask Pro Trader Strategies. They can answer that for you, since I don't use Thinkorswim. So that's more of a data issue. I handle all of the teaching and the mentoring questions, but anything regarding that, I would probably ask them, okay? Valerie's asking, once again, the question I said most people ask, do you have some back-tested result, which is the success rate? Once again, Valerie, you can only ask success rates for things that are traded the same way each and every time. I said at the very beginning, each and every one of you have to trade your own way, not by having people tell you how to trade it. So therefore, this is not a system. Remember, this is just simply a great tool for identifying the trend. Just the same way you couldn't ask, well, do you have any back-tested results or numbers for a moving average? Moving average is not a system. It's not a strategy. It's a tool for helping you decide certain things. Same thing with the PET D, all right? It's a great tool for helping you to find the trend. How you decide to use it is up to you, and I teach you the different ways in which to use it, okay? Now, once again, as I stated earlier, I think just a few moments ago, in order for us to backtest or get results, we would have to test the same thing each and every time, regardless of market, regardless of time frame, regardless of environment, and we're not a statistical company. In the opening statement, I said we are an educational company. We just want to educate you. And trust me, I used to work for a systematic company. I've traded systems, And I've never found in my own personal experience a system to hold up to its numbers anyway. I've traded systems that were supposed to generate results of 80%, and maybe they'd work for a month or two, and then they fell out of bed. So the point is, I don't have any faith, or I haven't seen any consistency in systematic trading as well. As I stated, the only way one becomes consistent is by making your own decisions and not relying on outside sources. This source can either be a system telling you what to do, what to trade, every trade. It can either be a person in a chat room or a trading room. It can be some guy on TV, or it can be an indicator. But either way, it's telling you what to do. It's my opinion that those things don't work. I know from firsthand experience, because that's the way I used to trade. My first 2 years of trading, I couldn't make a dime. The only way someone becomes consistent, in my opinion, is by becoming a part of the process. Okay, so that's what we do. We teach you all these things so that you can be a part of the process and thereby make your own decision. That's what the PET D is. It's a great, great tool, but it's not a system. Okay. Fiji asks, do you trade real money yourself, or do you only teach? No, I trade. In fact, I just got out of a trade this morning. I was long and made a little money, but I had to exit it because I was teaching the class. So yes, I do trade. And I'm just going to say this from, just from my own personal trading. I use the PET D every day. The PET D is what helped me get into this trade, and it was green the entire time. And I normally would not have exited, but I don't like to be in a position if I can't watch it. And I knew I was going to be speaking for the next hour, hour and a half. So I exited the trade with a small profit, and I hope the market is not screaming right now, because it won't give me a chance to get back in. But I teach and I trade. So, I only, share with you the things that I've used in my own personal trading. Okay. But everyone must trade differently. I do not have a chat room where I show people what my trades are. I don't believe that, because if I did that, trust me, you would say, well, I guess I'm supposed to trade the way Steve trades, and that would be a recipe for disaster. It's the same thing I ask my mentors. I ask them, I say, can you just show me what you're buying or selling, and I'll just do the same. They said the same thing to me. They said, no, that's a recipe for disaster, because you'll lose money, because you're once again taking your cue off someone else. You have to take your cue off your own ideas and your own decisions, okay? Nick asks again, would you take a trade if the PET D has a 3 red bar pattern, but the 3 red bars are above the 50-period simple moving average? Well, without getting into a lot of detail, because that's another one of our techniques, I personally, it depends. It depends on how the market is. We usually use the 50-period moving average for those people who don't know. I don't want to really go into it because that's another class, but that tells us what side of the market to be on. It's up to the person. A lot of our traders use the 50-period moving average to tell them what side of the market to be on. A lot of them don't. And once again, it's a personal choice. And I shift back and forth. This last trade I took was based off using the 50-period with the PET D. Other trades I take, I don't use the 50-period. It's all up to you. It says, Mr. Primo, I think the reason people are asking you all these questions is because there are so many people selling stuff but never ever show the real account statements and or proof if the stuff really works. Well, trust me, I know that, and I understand what that's like, but trust me, even if they did show you how well it works and how much money they're making, it does not no way guarantee that you will make that money. So that's the big truth I'm trying to share with you. Regardless if someone shows you their real truthful account, and let's say they make $1 million, that in no way guarantees that you're going to make any money. In fact, it almost says to me that you're going to definitely lose, because there's no way you can mimic that. Traders are not meant to mimic other traders. You're meant to trade on your own. So what only matters are things that have stood the test of time, techniques and tips and methods. And this is what we supply you with. Now, that still takes a leap of faith, but what you're getting is 40 years of trading experience, me as your personal mentor, okay? You're not getting someone who says, well, good luck, I make this much money, and try it and see if it works for you. You're getting someone who's going to be there with you step by step through the entire process, is telling you ways in which to trade, showing you ways to make it meet your needs, okay? So if you're still not convinced, you can go to Pro Trader Strategies. They have a testimonial page. You can Google us and see how much people really like our courses and how well they've done. You can see from people that have talked about us on the internet, okay? Valerie asks, how about the top or bottom 25%? Does the PET-D affect that trade? Yes, it does, Valerie, but that's a different webinar. It's a different course. We have a lot of people that haven't attended that, so I don't want to go into that today. That's a different technique. James asking here, the question from Valerie about back testing was really about how successful the PET-D at properly identifying the trend direction, not how much dollars you make by using a trade. There's a difference. Well, James, once again, how are we going to back test a 2500 tick chart as opposed to a monthly chart? And then what market? Remember, go back to the beginning. We're not a statistical company. We're an educational company. We're trying to inform all of you with providing you with education that stood the test of time. Trust me, even if we gave you statistics on showing you how well it defines the trend, in terms of what? In terms of where you entered, where are you going to be entering? In terms of everyone's going to be entering at different places. Everyone's going to be applying it differently. So it really wouldn't make much sense. It's silly to think that you're going to have statistics in terms of how well a moving average works. In what sense? In what way? So we're trying to show you how to apply techniques that have stood the test of time to a technique that really defines the trend. Okay? Most people lose money, in my opinion, because you're listening to outside sources and also because you're out of sync with what the market wants to do. Our job as traders is twofold. The first job is we listen to what the market is telling us, not to somebody in a chat room or not to some statistics, but what the market is telling us, what it wants to do or what it's doing. And then our second job is simply to jump on board. That's it. That's the only job as a trader, those only two parts, okay? There's nothing else. We don't have to pick tops. We don't have to pick bottoms. We don't have to look at statistics. We don't have to try and figure out what the news means. Remember, it is the easiest thing in the world to overcomplicate your trading by looking at these things. It is the most difficult thing in the world to simplify your trading. Once you have the courage to let go of stats, to let go of numbers, to let go of chat rooms and trading rooms, that's when I feel you'll be on that road to consistency. So this is what we teach. This is our philosophy. And trust me, do a Google search on us. If you're still a little frightened, if you're having a little, feelings of doubt, do a Google search or go to Pro Trader Strategies, check out their testimonials, and you'll get much more confidence in what we teach in our entire approach, okay? In closing here, I want to thank you so much for attending. I really hope that you've gotten something out of this today. You've got some education. You can see our attention to detail, how we really want to educate you to get you on the right path. And I really, honestly, think you should really take advantage of our suggested low price here on the PET-D, $24.95. And you can also get a really nice payment plan with that if you contact Pro Trader Strategies and if you do that quickly, because it's only for a limited time. In conclusion, thank you so much for attending. I look forward to all of you becoming members of the PET-D course and as well students of mine at Specialist Trading. Thank you so much. I will see you next time. Bye-bye.